Welcome back. Well, the markets have built on gains. We're holding with a gain of close to around 80 points, hovering around that 18,200 odd mark. But let's focus on a couple of names. Jindal Stainless Steel as well as Jindal Hisar. Currently, they're two separate listed entities. But, they're going to be getting merged very, very shortly. So we'll understand the progress on that front. And we're joined by Mr. Anurag Mantri, the Group CFO. Hi, Mr. Mantri. Good morning and thanks so much for speaking to us here on CNBC TV 18. Well, we're going to be looking at the company as a merged entity. So for the bulk of this interview, we'll appreciate numbers as a combined entity itself. But first up, when do we see one listed entity in the next couple of months?
So there is a good progress, Nigel, on this. The court has reserved the order and we are just awaiting the order. I think by end of this fiscal, which is by next 2 months, we should have only one shares before we exit this financial year. So it will then overall very value accretive for all the shareholders.
Yeah, it'll be good for us as well. It'll be easier to look at the numbers. By the next quarter, maybe, in fact, we'll have just one listed entity. Give us a couple of numbers then, Mr. Mantri. You know, earlier you were guiding for some growth. Then you all were talking about a bit of a degrowth, then a flat number on the volumes front. What do you end FY23 with regard to this volumes growth that you're talking about? If you want to give us a sneak peek into FY24 as well. And what about EBITDA per ton? Earlier, you were talking about 18,000 rupees per ton. But the last quarter, if I look at both the entities, pleasant surprise out there. Clarity on both these two.
Yeah, absolutely, Nigel. So, we in between, we actually tapered down our volume growth once immediately after the export duty picked up. But then with our agile business model, what we managed is that we actually continue to grow our volume in the domestic market. And especially in the auto and railway segment, we've actually pushed the good volumes because those are high-end approval-based segment, which helped us to continue to clock even despite export duty, the volume growth, which is unusual in most of the other ferrous metal companies. So that is now giving us the confidence that the volume-wise on this year, we'll be able to do at least 3 to 5% better than the previous year volume. So what we guided earlier was the degrowth in between after the export duty of 5 to 7%. Then we said flat, and then now we are confident at least 3 to 5% over and above the FY22 volume, which will be able to build FY23.
So that just just to follow up here. So earlier your guidance was flat. Now you're raising it to about 3 to 5%. Is that correct?
Yes, Sonia. So we are raising it to a 3 to 5% up over the FY22 volume.
Okay, got that. And what about FY24? What kind of growth do you think? I mean, will it be in the single digit, bracket itself? Or do you think at some point, given higher demand and things returning to normal, you could even get to double digit growth in FY24?
See, FY24, we can actually easily achieve the 20% volume growth because our new capacity will be coming on the free. So FY24 would be a good kicker for us in terms of the volume, and we'll be able to at least 20 to 22% growth over the FY23 volumes.
Okay, all right. And you're pleasantly surprised on the volumes front. You want to up the EBITDA per ton guidance as well? Are you feeling that confident, Mr. Mantri?
EBITDA per ton, as you mentioned, Nigel, that earlier we mentioned about 18,000 when all these things happened, export duty and the overall market condition. But now, seeing our 9 months delivery, we are confident that we will end this financial year with at least 19,000 plus EBITDA per ton. So, quarter 4, we are targeting 20,000 EBITDA per ton. With this, we'll be able to at least cross the 19,000 EBITDA per ton for the full year basis.
Oh, that's great. That's a big upside to what you've done recently. I mean, in quarter 3, it was 18,800. You're expecting it to go to 20,000 rupees EBITDA per ton by the end of quarter 4. That's good. On the debt front, I just wanted to understand now that the merged entity will come through in a couple of months from now, what will be the consolidated debt and do you plan to bring it down over the next, say, 12 to 18 months?
See, Sonia, if you see, our debt equity is one of the best in the metal industry. In fact, despite being in capex cycle, see, we are doubling our capacity, we are expanding. We recently acquired Rathi Super Steel also. So, and we are also in the process of acquisition of Jindal United Steel 74% share. So with all this, almost 2,000 crore capex is lined up in next 2 to 3 including our pending expansion capex in next to 4-5 months. Overall, but mostly it will be funded from internal accrual. But still, the debt could go up by another 300 to 500 CR only for an intermittent period of 6 months, because immediately then we'll taper it down. Our focus will continue to be very prudent on maintaining these debt equity and debt EBITDA ratios. The
So
debt
this
today,
rise of debt, yeah, sorry, you were saying the debt today is how much, and post this rise, how much will it be? How much are you comfortable keeping it at?
debt today is 2,824 crore as on the 31st December. It could go up slightly by 300 to 500 crore because we have all these acquisitions lined up in next 3 months.
Yeah.
It can touch to say 3,000 to 3,300 crore. But
Yeah.
also, it will be only for an intermittent period, only 4 to 6 months. Immediately, we'll taper it down.
Okay, but JUSL, which you all will be acquiring as well, that will bring in additional debt, right? So including JUSL, that will be another 1,900 crores?
Yes, including JUSL, but mind you, Nigel, JUSL will also bring the additional EBITDA to the company. So the ratios will not be that much deteriorated because it's coming along with its own value addition and EBITDA.
So the peak debt will be around 5,000 crores, including JUSL. But since you're saying it will bring EBITDA, tell us what is the EBITDA number you're looking at out there. I'm looking at the 9 months performance of JUSL. You have delivered close to around 480 crores. If I extrapolate that, you're going to run rate of around 160 crores. What do you end this year with for JUSL?
See, JUSL is likely to end close to 700 crore for this year. And
Okay.
that will be when I talked about the JUSL debt and how that's getting the value addition in terms of the EBITDA. So the EBITDA merged entity guidance, what I'm guiding for FY24 is say around 20,000 per ton. So we are not now giving the lower end range. We are for FY24. We are now confident we'll be able to close at least looking at the conditions today around 20,000, and over and above that JUSL should add around another 3,500 rupees EBITDA per ton.
So what would the absolute number be for JUSL? This year you end at around 700 crores. For next year, JUSL will give how much approximately EBITDA number?
It's a rolling mill, so it could go almost close to 775 to 800 plus crore sort of
For next year.
Next year.
Oh, all right, Anurag, thanks very much. Good speaking with you. Appreciate you joining in with that commentary on the business. Just two or three names I want to highlight before we bring in our next management, which is ready with us. Look at Balaji Amines and Relaxo, two huge underperformers. Both are coming up a little bit.